Hello, everyone, and thanks for joining us this month for Side by Side Digital. I'm your host, Rebecca Shively. We've got a great program lined up today. This month, we are celebrating balance sheet season. As the end of the year approaches, many of you may be thinking about a balance sheet appointment with your lender. We've got two special guests on today that are going to walk us through a balance sheet appointment in real time. Sam Behrens is a young and beginning relationship officer serving Central Iowa, and Lori Johnson is a business development officer out of Northeast South Dakota. However, Lori is with us today in a different capacity. She and her family run an operation, and she is meeting with Sam today to go over her balance sheet. They've agreed to let us listen in on their conversation and ask some questions along the way. Sam, Lori, thanks for joining us. I'll go ahead and turn it over to you guys.
So my name is Sam Behrens. I'm a young beginning small relationship officer serving Central Iowa. And this is a new role for our association where we work exclusively with those young beginning and small producers to mentor, to coach, to help them grow and develop into whatever their goals are. So I'm super excited about this new role. I'm excited about our webinar today to share some of our insight that Lori and I will go through as we go through a balance sheet meeting.
I'm Lori Johnson, and like Rebecca said, I am a business development officer serving South Dakota and northwest Iowa. And I'm here today as an operation, which my husband and I do have an operation. And so we'll kind of give you guys a little insight into our balance sheet appointment. This is not our operation, but it is an operation.
So before Lori and I actually get started to simulate our balance sheet meeting, I wanted to walk through real quick how, as a producer, you can get to AgriPoint, which is our online system or online banking. But if you go to our website, put in your username and your password. So this will be kind of your home landing page. It'll list all your accounts that you have with us. Again, this is just our test environment. But if you go up here to Finance and click on Financials, this would be where you can actually create your own balance sheet and submit it to your financial officer. And you can go in here and practice if you want. You can run scenarios if you want, but you can also send directly to your financial officer now that harvest is kind of wrapping up. If you want to kind of get a head start and do that, this is a great opportunity for you to do that. So you can create a new balance sheet right here. But for the sake of time, I kind of went ahead and built a balance sheet that we did last year. So this would be Lori as a customer. This is the one that she did last year. And then the one we're going to work on today is right here. So again, this just walk through the steps to do it, to create a new balance sheet. So let's get started. So Lori, I see you came today prepared. I sent you your balance sheet, old balance sheet to kind of fill in new numbers and update debt. I'm just curious, I guess, how the rest of the crowd, audience, how they prepare for their balance sheet. So we've got a poll question here. How do you prepare for your balance sheet meeting? Okay, and results. So the big winner was I fill it all by myself, and that is awesome. I'm glad that almost half of you fill it out yourself, have the ability to do that, understand it. The second winner was write some on a piece of paper. Again, that's a great start, which Lori at Customer Day, that's how she's doing it coming to the meeting. So as long as you have something written down, it helps the meeting go a lot quicker, a lot smoother.
Well, I appreciate you sending that out. It kind of gives me a starting point from where we were last year to kind of gather some of those numbers and think about what we've done over the year. So
basically, Lori, what I did, I copied your balance sheet from last year. So all your assets are going to reflect the ones from last year. I've updated all your debt at Farm Credit, so we don't need to do that. And when you're at home, if you'd ever do that at home, it says one of this is right here, this button right here, this little circle says update all your assets and liabilities with us. So you click that, that automatically loads. So you don't need to worry about accrued interest or payments. That already take care of itself. So it's a really nice feature.
Nice.
So let's just jump right in. Let's start updating your assets. So again, these are what you had last year. In savings account, you had about 12,000. What do you have this year?
So I have 13,500.
Perfect.
And checking is 1,800.
Great. Accounts receivable. So last year you had some corn that you had deferred. Do you have
and I've got that's a little bit of that. So I've got about 5,000 bushels of corn at 520.
And that is sold, deferred. You're just waiting to pick up the check, right?
Yep.
And you help me with the math. What is that?
That would be 26,000.
Thank you. Great. Market livestock. So last year you had some calves only about 550. What do you have for head now?
So we've got 25.
25. And what weight should I put them at?
1,300 pounds.
Okay. Are they going to be sold pretty soon?
No, not till the summer.
Oh, okay. So what are they weighing now?
Oh, you want the weight right now? Oh, sorry about that.
Yep.
So 550.
So a point of emphasis here is a balance sheet is just a snapshot as of a time. So I need to know exactly what your feed inventory is today and what your calves weigh. Yeah, I know you're going to sell them when they're fat, 1,400 pounds. But ultimately, if we put them at 1,300 pounds, you're going to feed grain and stuff, and that's eventually going to go down. So I need to know exactly where they're at today. So 550 pounds, 25 head, right?
Yep.
Do you want to
today.
use,
Yep.
what do you want to use for price?
170.
Okay. So you have about 23,020 value today if you were to sell them.
Okay.
Crops and feed, what do you have available today?
Okay, so I have some corn in the bin at home right now. I've got about 13,500.
Okay, what price?
Well, $6.
Okay, $6. So what's the market today?
I guess I'm not thinking about that. I was
Around,
thinking about what I'm
like,
gonna sell it for.
So you're hoping to get $6 for it, right?
Right.
So the market is $5 today. Let's bring up our second poll question. So if Lori was bringing up her balance sheet, what should she value her corn today? $6 like she mentioned? $5 closer to what market does, or $4 go low and be happy if it ends higher. So what should we value her corn at today on the balance sheet? So 94% say $5. And that's exactly right.
All right.
Because
All right. $5
Yep.
then, Sam. Now that you've explained it as a snapshot in time. Okay.
Snapshot today, and we hope that goes to $6, but we got to know, what do we know today?
Okay. All right.
So we'll put those 13,500 bushels at $5.
Okay.
Okay, what else you have?
I have some corn at the elevator. I have 22,000 bushel there.
You want to use the same $5?
Yeah, I think that's,
Because that's all open unpriced, right?
yes. I have some
Beans?
soybeans at the elevator as well. I've got 7,500 bushels there.
And price today?
1175, I think, is what I saw for price today.
Okay, perfect. And last year you had a few hay bales, about 15. What do you have today?
So I've got 23 of them right now.
You'll still want to leave them at $100 a bale?
Yeah, I think that's fine.
Okay. So prepaid expenses, anything that you prepaid for the upcoming year so far?
All right, so I have seed beans. I prepaid 15,000. And I did get some fertilizer as well at 12,500.
Okay.
And I have some fuel in the barrel at 500.
So nothing for seed corn that you prepaid.
No.
So
Yeah, no, I haven't prepaid any of that yet.
perfect. So that's kind of what we had for current assets. Those are assets that will liquidate, turn into cash, move in the next 12 months.
Okay.
Non-current assets are the machinery, equipment, the land that you plan on holding long-term. So machinery and equipment, anything bought, sold, traded.
Yeah, so we actually did purchase a baler this year.
Okay.
So we got a John Deere baler 2018.
And what did you pay for it?
So we paid 40,000, but we sold our old baler for 25,000, and then we put 15,000 in cash.
So the baler right here, you sold that.
Yes.
So we're gonna mark that as sold.
Okay.
And you said you paid 40,000 for the new purchase.
True. Yes.
Perfect. And then the 15,000 was with cash. The
Yes.
difference. Perfect. Okay. Machinery, or excuse me, vehicles. We have your
No,
Ford
no,
F-250.
no
Okay.
change on vehicles. Nope.
So we'll just depreciate those, our standard 10%.
Okay.
Breeding stock, we had about 15 cows last year.
So we bought 3 more cows, so we've got 18 total.
Still the 1 bull.
Yep, yes.
Buildings and improvements. So we got your contract swine barn that you built back in 2015.
Still have it.
Okay, so we'll just depreciate that, our standard 4 or 5%.
Okay.
Kind of get an updated value on that all the time. And then real estate, we've got your acreage, but I do remember you bought your grandpa's farm. So remind me of those details.
Yeah, so we bought Grandpa's West 40.
Okay. And remind me purchase price.
Well, you want the purchase price? So we purchased it for $7,000 an acre, but it's valued at $10,000. So
Yep. So grandpa gave you a little break,
right.
right? So I understand the market's at 10,000, but what we like to do is put it on what your cost was. And again, that's
Okay.
probably being a little bit conservative, but that's okay. So we'll put this in at cost, knowing that it's still worth 10,000, but again, we want to be a little conservative on what we put in for a value.
And we did, remember we did that FSA loan with this, so I
Yes.
don't know where that goes as
Yep.
well.
Yep.
Okay.
We'll get that to when we add the debt.
Okay.
So that's just remind me. So that's a great point, and we'll catch that in a little bit.
So Sam, you said I would have access to this. I could go on and like update this and send it to you in AgriPoint?
Yeah. So once we get this all done and we get it locked down, once our underwriters look at it and we lock it down, yes, then you should be able to see it.
Nice. Okay.
Yep. And then you can build off this for a year from now.
Okay, cool.
I think the last asset we have is your spouse's 401k. Do you have an updated balance on that?
Yeah, so I just looked at it this morning, and it's at 66,487.
Perfect. Good. So those are the assets that we had last year. Are we missing anything? Anything you can think of?
So what I did just put a bean check in this morning when I went to work. So
Yep, we will make sure we catch that because it won't be
Oh, okay.
reflected in your the lower line of credit balance because we're taking the balance as of today.
okay, yep. So I guess I did put in a bean check in there.
And how much was that?
8,741.
Good. Yeah, we want to make sure we capture that because that's grain that's gone. You haven't
Okay.
reflected in the inventory you gave me. So
Okay.
we want to make sure we give you credit for that.
Okay.
Okay.
Well,
Any
I
other
do have-
assets?
Yeah, I do have one more thing. Well, you know, my husband and I like to collect guns, and so we do have a gun collection, and it's probably worth more, but it's about $5,000, and so that should go on here somewhere, shouldn't it?
Sure. That's a great question. A lot of people will have antiques or collectibles or household equipment, a gun
Mhm.
collection. We just don't put those personal assets on because those we can't take those as collateral. Those can be easily bought and sold all the time. So fortunately, we just don't list those as collateral
Oh,
or
okay,
on your balance sheet.
okay. All right, well, that's good to know. Make a note of that.
So moving on the not so fun side, the debt side. Let's start up top, your accounts payable.
Okay.
Last year you had some cash rent due. Do you still have that or has that been paid?
Nope, we still have that actually.
Is it still
Same
8,000?
price. Yep, still 8,000, yep.
So accounts payable, think about any bills that are still associated with the 2021 crop. So a co-op bill, a credit card, any seed, anything, crop insurance, anything that's still has to be paid for the 2021 crop.
No, well, we do still have some money at the John Deere Financial.
Okay.
And
Do you know what
but
that
that's
is?
2,500.
Okay, good. Okay, anything else you can think of?
I don't think so. I think that's all that I kind of had listed, but
Yeah. Last year you had just a little bit on a credit card, about $900. Do you have an updated balance for me this year?
so I looked it up again this morning and it was 522.
Okay, good. And I know you guys pay your credit card off every month, but that's your current balance. So I want to show the credit card balance over here. If I show a zero balance, I need to reduce your cash position by the same amount. So we're trying to get the balance. So
Okay.
it'll be paid, but at the same time, your cash will go down too. So this is
It's
why
this-
we'll
That snapshot in time. You're getting it to me. I'll figure it out.
Yeah, good. All right, so like I said, all the farm credit debt has been updated, but I want to go through it with you real quick.
Okay.
So your first one is the development fund for your cows.
Yep.
So 1.5%. There's your payment, $5,300, and you're down to about 20,000 on that. Is the
Okay.
balance.
Okay.
Your machinery loan is at 4.5%. Again, a fixed rate. There's your payment, and you got about 63,000. So about 2 payments left on that. That thing will be gone. So
Nice.
that'll help cash flow. Yeah, certainly.
That will be
2
good.
years, that'll be really good. And then let's go down to your other term loan. So this is your Tahoe. So I'm going to need help on these because this debt is not with us. So I need updated balance. So your Tahoe, do you know what your new balance is?
So my total principal amount is 19,321.
Okay.
Oh, wait, sorry. Was that the Tahoe? I'm sorry. That should be 16,000.
Okay.
Sorry, 31.
Okay. And then you said the pickup was
That one's at 19,321.
perfect. And then I'm going to adjust these because I calculated ahead of time for you. Okay, that should be right. That should be right. So perfect. And then I added your swine barn loan.
Yep.
424,000 at the balance. And again, you're making, you're gaining about 45,000 of principal a year. So that's helping your overall equity each year by tremendous. So that's tremendous payback. It's been really, really good for you and your operation. Your acreage, about 126,000 on it.
Okay.
Your payments, just under $1,000 a month. But we need to add Grandpa's 40, right?
Oh, yep. Yeah.
That didn't port over for me, so let's get that. So that principal balance is 140,000, right?
Yes.
Your payment is, you got just a little bit of interest accrued. And that rate was 4.6%. And the principal portion that you're going to pay down this upcoming year is 22,000. Okay. So that look all good. The 40,000, the main thing is your 40,000 in your payment.
Yes. I think those are right. The interest rate's right and the total balance. So yeah.
Okay. So now we also need to add the FSA portion of it, right? So I'm going to probably need your help on that.
Okay.
So just a second here, Grandpa. So do you know the balance on that?
So that's that was 126,000.
Okay. Your payment amount?
I believe it's 7,340.
Okay. And that was at a really good rate. I think it was at 1.5, right?
Yes. Yep, that's right.
Accrued interest on that, do you have that number?
So when I called them, they said it was 918, I think.
Okay. And then when I calculate your principal portion you're going to pay down this coming year is $5,450. Okay. So we got the debt. You bought the baler, but you traded in. You paid cash for it.
Yep.
You bought some livestock, a couple
Yep.
cows, but you paid for that.
Yep.
And the really only other purchase you had was Grandpa's farm, and we've
Yep.
accounted for that debt through a loan through Farm Credit and a loan through FSA.
Yes.
Okay, perfect. So now that we got this balance sheet constructed, I always like to look and compare it to last year to build a trend. So that brings us to our third and final question. How do you review your trends, your balance sheet trend? So pretty balanced, pretty balanced. So yes, about a third of the people said, yes, I do it myself. About a third say, my officer usually walks me through it. Or the winner at 40% was, I haven't, but would like to. So let's walk through how you did this past year. So I'm going to switch screens real quick here. For the audience, this is just a different format that's on an internal form that it's probably going to be easier for me to present to everybody. So that's why I'm switching this. But you can do this in AgriPoint, just like I did. There's a button up there that says trend, and you can go in there, it'll ask what balance sheet you want to compare it to. So it's really, really simple if you want to do it yourself once you get your balance sheet constructed. So this is our balance sheet trend. We've got 2 years of balance sheet. Over on the right, notice the date. This is the one we did last year. And the one on the left, this is the one what we just did today. Okay, so if we kind of float down to the bottom here, again, this just captures all the new numbers, compares real estate. You can see the real estate went up because you bought the farm. If we look at total debt down here, it also went up because you bought the farm, right? Your assets went up, but your debt also went up because you bought the farm. If we scroll clear down the bottom, this earned equity change. When we look at your net worth from a year ago to where you're at today, you're up about $125,000. So that means your operation, after paying all debt, all family living, was up about $125,000, which is a phenomenal year. So congratulations to you and your husband for having a great, great year.
Nice.
The other number I'd like to look at is working capital change. So last year, your working capital was about $11,400.
Okay.
This year, you doubled it to about $24,000. You can see you went up about this $12,000 figure. So again, a positive direction,
Right.
still really, really good. And you're probably thinking, okay, if I made $124,000, why did my working capital only improve by $12,000, right?
Yeah, that's what I was wondering about.
Yep. So if you think about, you did put some money down on the farm, that was $15,000. You
True.
bought the baler, you put some cash down when you did that. There was another $14,000 or $15,000. You bought some cows.
Oh, yeah.
So those are all, you use your cash to do some of those things, which is fine. But the big thing for your operation, this is going to vary by operations depending on your debt level, is you see this current portion principal debt.
Yes.
So in this upcoming year, you're going to pay down principal by $107,000, mainly because of the hog barn.
Okay.
So you're generating a lot of cash, a lot of profits, but it's using to go pay down debt. So that's why you're not seeing your working capital go up as much, because a lot of your earnings are going to pay down debt. And that happens when you have like a contract swine barn with aggressive payments, heavy debt load. That's very typical. So at the end of the day, I'm extremely happy of how your operation performed. The working capital is probably still a little bit of weakness for your operation, but again, it's moving in the right direction.
Okay. Well,
So any questions for me?
yeah, well, I mean, we figured we maybe had a good year. We weren't really sure, and now you just told us we did. So there was something that we've been thinking about that we wanted to do, and so I'm going to run it past you, is that we've been planning to purchase a boat. You know, you said we had a good year, you know, and so we'd like to kind of reward ourselves for the good year. So I think, and we've been thinking about this for a little while, so it's not like it's a pop up, but we'd like to buy a boat.
Yeah, and I can appreciate that question, Lori, is, you know, as your financial advisor and partner, you've got some debt on your 2 vehicles. You got a couple years left on those. You got your machinery loan that's going to pay off in 2 years, which is a big, big payment. Yeah. So what I would like you to do is continue to work on building that working capital, hold off on the boat for a year or two until one of those payments fall off, and then you can replace the debt. Because from what I see is your operation can handle this much debt. But all of a sudden you buy a boat, which is a non-income producing asset. It's kind of for leisure and fun, which I'm all about. And I'd love to come have a ride on it. But I really think it's probably in your best interest just to wait a year or two until you can improve your working capital or a debt payment falls off. And then you can replace it with the boat.
No, I know. You're right. You're right. It's just, I mean, and I get that. And I think that's the conversation we've had back and forth a little bit is, should we, can we, what should we do? And so I appreciate that. And that's why we look to you guys, and I value your opinion about the way you're coaching us and what we should do. So. And
another thing is, you know, you just added the debt from Grandpa's farm.
Yeah.
You haven't made a payment yet. So I want to see how your operation reacts to that added payment and the principal pay down. So if we kind of give a year for that to settle, and again, we're another year closer of some of that stuff being paid off, I would say in the next 18 months to 2 years, then you guys should definitely be going and looking for a new boat.
Okay. So, I mean, that's kind of our goal then, right? Is just to kind of stay the course, keep trying to pay down some debt, not do anything crazy and buy a boat. So just really, we need to, okay.
Yep.
I mean, that's hard though, Sam. When I'm young, I'd like to do some of those things. And so it's really hard when you have to stay the course, but I understand. I get it.
Yeah. You guys have been very successful. If you look at your net worth, given your age, you've been very successful. Again, it's just the working capital, and that's just kind of a strain on growing operations because you guys are buying a farm and put up the hog barn, and it's just a lot of cash. But again, you're well on your way to being successful.
So Sam, you guys have talked about working capital. You've mentioned a couple of times. What is working capital? Like, what is that?
So working capital, again, is your current assets. So you're sitting, if we look at the stuff up here.
Okay.
So those are assets going to be liquidated or can be liquidated in the next 12 months. So think about your fat cattle,
Okay.
your grain. You're going to sell all that stuff in the next 12 months, right? Your prepaid expenses, that's going to turn into crop for next year, will be liquidated. So these are all assets that are being liquidated in the next 12 months.
Okay.
Current assets. Current liabilities, on the other hand, is debt that you have to pay in the next 12 months. So like your rent check, you got to pay. Our operating loan realistically needs to be paid back in the next year.
Okay.
As we look down, you got some outstanding checks, a little bit of credit card, you pay that off monthly, but again, that's got to be paid off in the next 12 months. And then the big one for your operation, as I highlighted here, is $107,000. That's a principal portion of your payments that you're going to make to us or to FSA or to other creditors that'll pay down the debt. So when you take those numbers, 369,000 less your 345, that's where we come up with the 24,000.
Okay.
So that's your cash. You've got your cash cushion
Okay.
to pay down debt, or if market would fall or if some of your cattle would die, that's going to take a hit. So that's why it's so important to have that working capital there.
Okay. Good. All right. Well, I didn't know that. Thank you, Sam, for explaining that.
You're welcome. So I don't know if you have any more questions, but I imagine we have a little bit of time to take some questions from the audience. Rebecca, if you want to help us share some of those questions.
Yeah, thanks, guys. And thanks for letting us eavesdrop on your balance sheet appointment. We actually did have a question come in around working capital that's maybe related since we're talking about that. But Sam, can you speak, are there any kind of certain standards or goals that people should strive for, or is it kind of individual to each operation specific?
Yeah, we get it down to a per acre working capital kind of guideline, per head guideline. But I think probably the best rule of thumb is we probably want to have 20 to 25% of whatever your gross farm income is, have that in working capital. So that if your combination of cattle or raise some pigs or wheat or corn, whatever you're planning for gross farm income that year, take 20 to 25% of that number, and that's kind of your working capital target.
Nice. Another question that came through, any advice on how to handle gift or inheritance from like your parents? Where does that go on the balance sheet?
Yeah, so in this example, Lori got kind of a gift from Grandpa because the land was worth $10,000, and we put on the balance sheet as $7,000. Where you can make the point where we could put it in at $10,000 per acre, but as the market value. But she really paid $7,000 for there's a $3,000 gift. And what we do, we just make there's nothing here, but there's an adjustment. So we would adjust basically $3,000 per acre times the number of acres that she bought, so 40. So $120,000 adjustment, because at the end of the day, we want to find out what you earned, right? Not inflation, not what was gifted. So any gift or inheritance is fantastic for your balance sheet, but let your officer know so that we can kind of earmark those so it's not in your earned equity change. We'll back it out and show it as adjustment right down here.
Great. Another question that came in through the chat. Can you talk more about current ratio?
Sure.
We're quizzing you with all the ratios today, Sam.
Yeah, no, I meant to talk about that, so I'm glad they reminded me. So in this example, last year she was at 1.03 to 1. So that meant she had $1.03 for every dollar of liability current liability that she had on her balance sheet. This year she improved because working capital improved, is now $1.07 for every current asset she has up here to pay for every dollar of liability through here. So it's just another way to measure liquidity and your working capital. And I think our rule of thumb was we probably want to see about a 1.5 to 1. So have $1.50 of current assets to every dollar of current liability. But in this case, she does have a lot of current portion debt in the hog barn. So in that case, we probably reduce that standard or ratio. I don't know if it's 1.2 to 1, but she is carrying a lot of current portion principal debt up in the top half of her balance sheet because of the hog barn. So really, she's not too far off in this example from the target for current ratio.
Sam, can you tell us, like, what are some of the common mistakes that you tend to see when it comes to putting together a balance sheet? I know you have a lot of experience and you've worked with a lot of farmers on this. So are there certain things that kind of jump out that we should be looking out for as we're heading into kind of balance sheet season here?
Yeah, I think the most important one is, remember, a balance sheet is snapshot as of this day. So like Lori and I talked about is, what do the cattle weigh today? What's the local corn price, bean price, wheat price? What is it today? Not what you're going to have it sold for, what you think it's going to go to, but what it is today. And the other thing is just remembering about all your purchases and sales throughout the year. I always tell my customers, if you buy or sell or trade something, email me and I'll put it in our notes so that when we get together and meet, I'll review our notes and I already have that loaded in your balance sheet before you even get to the meeting. So just keep your officer in the loop of any purchases, sales, trades. If you put tile in, any improvements to a cattle barn or anything like that, just keep your officer a quick text or email to them, let them know, because at the end of the day, if we don't capture it on your balance sheet, that cash disappeared somewhere. So we want to make sure we always capture it, otherwise it looks like a loss.
And I would agree with Sam. So we don't necessarily let our financial officer know, but we have a running list. So when we do get ready for our appointment, we have that whole running list of when we buy something, we put it on and it stays on our fridge. So just kind of as a reminder for us to make sure we're keeping track of that.
Great. Just looking at some of the other questions that we've had come in. You may have talked about this a little bit, Sam, but do you revalue machinery every year depending on market value or keep that consistent?
Yeah, we keep that pretty consistent. We hit our standard 10% depreciation. And I understand, I visit with customers all the time about this is, I've got older equipment, the stuff is actually worth more than what it was last year. But as a company, we decided to settle in at 10% because some people may have newer equipment and it does depreciate more than 10%. I understand the market we're in today where used equipment is hot and appreciating, but we found it very successful if we just depreciate machine equipment 10% per year. And it's kind of whatever number you gave us to begin with, we just depreciate that. And there can be occasions where we send an appraiser out there to kind of get a new value on your equipment. Or if you feel, we've got a tractor listed at 100,000, it's worth 180, and maybe you have some documentation of why that is, we can take a look at that and get that updated.
All right, we got another one from the audience here. If your barns happen to be empty on the day you're doing your balance sheet, but more animals will be bought soon, do you wait to do your balance sheet till you have animals on hand?
So I'm assuming this is, they're owning it, right? They're owning the livestock. Did they mention anything about owning it or whether it was contract? I'll do both scenarios. So if it's a contract swine barn, those checks come every month, whether there's pigs in there or not. So don't worry about the timing of the balance sheet. We're still show the debt. We know that payment's coming in the next 30 days, so don't worry about that. If you are owning the pigs or cattle and putting them in a barn, it doesn't matter, because if they are in the barn, we will value them, but then probably your line of credit is also up higher because you got to borrow money for those animals, right? If they're not there, we'll put a zero value for livestock, but we'll also, line of credit should be less because you haven't borrowed money for those. So timing doesn't matter to me or as an officer. Again, it's just, remember, it's a snapshot as of that day. Don't worry about that.
Sounds good. And it looks like they do own it. So I appreciate you answering it both ways.
Yep.
Let's see. I think we have just a couple more in the hopper here.
Just remember, it's a balance sheet, right? So if we have an asset, the livestock, the debt should be on the other side too. And if you pay cash for them, the cash would have went down, but the livestock balance would have went up. So remember, it's a balance sheet. So everything's got to balance out, debt and the asset.
In terms of making decisions about purchases, should I be using my balance sheet to do that? Or is there another financial tool I should be looking at instead, or a combination of things?
Yeah, Another great question. The balance sheet is one tool. I would say the other tool that would really help as you look at expansion or to buy that boat is put together a projection. What am I going to have for income? What am I going to have for expenses? How does that new payment affect my cash flow? Do I have enough money at the end of the year to buy that new farm, to buy that tractor, to buy that baler? So I would say the projection and cash flow is probably a really another good tool. The balance sheet really is just, again, it's a snapshot of where you're at today. And then also it helps us understand past performance of your operation. So has your operation generated a bunch of earnings that, yeah, maybe you've had a history of averaging gains of 50,000 per year over the last couple of years. Maybe a $15,000 payment for that boat isn't a big deal. So the balance sheet really helps predict where you're at today and past performance, and helps understand your long-term and short-term risk-bearing ability. And then the other tool will be the projection as we look forward to see what the next year brings, and income expense, and does it make sense to do that expansion or add that debt.
All right. We had another question come in about kind of the timing of the balance sheet. So do you recommend doing your balance sheet exactly the same week every year, or is there a little bit of flexibility you can have there?
Yeah. In a perfect world, if we could do it the same day every year, yes, that would be great. But I would say if you can get a couple weeks, either before or after, because again, it matches up. It'll help the trend a lot better if we know what time that balance sheet is. The other thing I would say about like grain producers, try not to do a balance sheet in the middle of summer, because when that corn is head high, it's just tasseling. We don't know what the fall price is going to be. We don't know what your yield is. It's real hard to put together a good balance sheet when we don't know what those assets are. And honestly, that's really what's going to change a balance sheet, is the top half of the balance sheet. What's your current asset? What's your livestock? What's your grain going to be? So anytime from after harvest until you plant that first seed is probably a really, really good time for grain operations to do. And cattle, it's hard to do because you're always raising calves and always got calves on hand. And sometimes if you can wait till your calves are sold, maybe that makes sense, because then we know exactly we know there wasn't any death loss. We know exactly what they weighed. We know exactly what they brought per pound. Take some uncertainty out of it if we can wait that long.
All right, maybe a follow-up question to that. Someone else asked, should you do your balance sheet in alignment with your fiscal year? So maybe like you just said, whatever that may be.
Yeah, in a perfect world, yes. That if you want to wait till December 31st, if you're on a tax year, fiscal year runs December 31st, do your balance sheet then. And maybe you do your balance sheet then and then bring it to the financial officer, submit it to them shortly after the first of the year. Be fantastic. That in a perfect world, that is the best way to go, because again, it matches kind of income expense with the balance sheet for assets and liabilities.
All right. It looks like we're just about out of time, but I want to give an opportunity. Sam and Lori, we haven't really talked about, you also help producers working in their operations in addition to farming yourself. So I'd like to kind of pose this last question to both of you. If you'd like to leave one piece of advice with the audience as we're headed into kind of the balance sheet season here, end of the year, wrapping things up, what's kind of the one thing you'd like to leave the audience with today?
I guess as a young beginning producer, I still feel like we're young in the beginning, but we've been at this 11 years. And I think sometimes when you first start and you look at your balance sheets, it can be kind of doom and gloom and it feels really heavy. But I would say it's a lot more fun when you start seeing those trends like Sam talked about and see that you're making headway in the right direction. And so don't get discouraged when you're young and beginning and you just start seeing this. Stick with it. And like Sam said, really be diligent about it. Stay on track. If the financial officer has some advice for you, listen to them. They want you to do well. They want the best for you. You know, if you want to buy that boat, have that discussion with them, because there's things that they see outside of it.
And the only other thing I would add is keep your lines of communication open with your officer. Just be upfront, honest. I mean, we want to help you be successful. If you're successful, we're going to be successful. So just keep those lines of communication open. Communicate with them throughout the year. Let them know of purchases, trade, sales. Run those ideas by them. They want to help be part of that decision. That's what we're here for, to help. So keep the line of communication open with your officer.
All right, that sounds like a great note to end on. I want to thank both Sam and Lori for being here and for your great insight, great advice, lots of really good nuggets to take away today. And thank you in the audience for your participation and a lot of really great questions that came in today. And we will be back next month on December 1st, where we'll be taking on cost of production. So again, really building on that balance sheet. We'll get into cost of production next month on December 1st, and we hope you'll join us. Until then, take care, and we hope to see you online soon.